Right, good morning, everybody. Welcome to today's weekly webinar. This is hosted by REI on alternate Wednesdays and Thursdays. Thank you for joining us. I know a lot of you are logging on right now. I can see you all coming into the room. So thank you. It's great having you on board again. And today is the first installment of our exciting new series, Property Authors and Their Personal Real Estate Investment Journeys. And today and going forward over the next few months, we have a fantastic lineup of esteemed property investors and business people become authors who will also be sharing their insights and experiences in the world of real estate investment. And our goal with this webinar series is to bring you closer to some of the industry's most influential players and authors, allowing you to learn directly from their triumphs and their challenges. And in each session of this series, we will be we'll be joined by accomplished entrepreneurs, investors, and authors who have not only written extensively about real estate investment, but have also walked the talk by successfully investing and building their own property portfolios and businesses. And so today's masterclass is brought to you and hosted by Real Estate Investor in conjunction with Scott Picken of Wealth Going Global, who I will introduce to you very shortly. And for those of you that don't know me, my name is Neil Peterson, founder and content-in-chief of Real Estate Investor, South Africa's leading independent real estate digital magazine, our content and education platform for more than 16 years already. So I'm really honored to be your host and moderator for today's masterclass. So at REI, we're really passionate about serving the South African global and the business and the real estate community through our digital platforms. Which is obviously the digital magazine, Real Estate Investor, our webinars, and live events and educational material. Possible. So let's move on to our topic for today, to how to build a globally diversified passive income, and our guest speaker, Scott Picken. So Scott is a renowned expert in the field of international real estate investment and wealth creation. He's the CEO and founder of Wealth Migrate, the global real estate investment marketplace that allows investors to access high-quality property investments around the world. So with his extensive knowledge and experience, Scott has helped numerous individuals achieve financial freedom through passive income. So whether you're a seasoned investor or just starting out your journey towards financial independence, this masterclass today promises to equip you with practical knowledge and actionable strategies. Scott, thank you for being here today, and we eagerly await your insights on building a globally diversified passive income. Please join me in extending a warm welcome and giving a virtual round of applause to Scott Picken as he takes the virtual stage. Scott, the virtual stage is yours.
Hello, Neil. Wonderful to be here, and thanks so much for sharing your stage with me. And I do love the world nowadays. You know, we get to communicate with people all over the world, no matter where we are. From a digital perspective. So it's really, really interesting. You know, Neil, you and I have walked a very long journey together. I was thinking about it this morning. Actually, I first met you in 2008. You brought Dr. Dolf de Roos out, which I'm going to talk more about just now. But this book here, most property people have read this book. I'm very surprised if they haven't. And you brought him out in 2008, and we're doing an event around South Africa, a bunch of road shows. And like, for me, it was like the most amazing experience, because not only did I get to participate with you, but I got to meet Dr. Dolf de Roos, who was your guest. So it's been an interesting 15 years that you and I have been walking this journey together. And I think for me, one of the things that I'm so grateful for you and for your team is that you keep trying to share with investors valuable insights. And what I found fascinating looking back over the last 15 years is if more people had listened to the advice you were giving them, like so much further ahead in their life. And if I've got one question today, and Neil's given me quite a challenge today, because he's like, Scott, download 24 years of your experience and give it to our team and our participants in 60 minutes. I'm like, really? but I'm quite excitable. It's just sort of the game I play. But really, I think if there's one thing that people can take away today, it's that, we've been doing this for 15 years. We've watched a lot of people, come and they've been to live events with Neil. They've read his magazines. They've literally, been to live events. They've been on buyers trips. They've been everything. And yet, when I look at it, the people that took action are the ones that ultimately got the results. And so, I really want to emphasize that. And I want to share with you, if you don't mind, Neil, I'm going to jump straight in because I'm conscious of time here in terms of where we're going to go. So we're going to go on a bit of a journey today. And, what we're going to be looking at is the new way to invest, how to reduce your risk by 80% and yet increase your return by a factor of 5. Now, many of you will sit here and they'll say, that sounds too good to be true. And that's fine. I would ask you just to stay with us because it's not too good to be true. And I'm going to share with you one of the top investors in the world, how he's managed to do that over 40 years, earning an average return of 21%. So I'm not interested in get rich quick schemes. I've got no desire. In fact, almost everyone I've ever looked at doesn't work. In fact, I don't think I've yet to see one that does work. But yet what I am interested in is people that have done it for 40 years. And so I want to take you on a bit of a journey though, and I want you to start engaging your brain. So what were you doing 11 years ago? Let me know in the chat room. If you're sitting here passively, Neil and his team have very kindly put this together, and we got a lot to share with you. We've got a lot of value to give you, but the more you engage, the more you're going to get. So let us know, what were you doing 11 years ago? I really want you to engage your brain. It's 2012. We're starting to get to the back end of the global financial crisis. The world's starting to change. What was happening in your life in 2012? I want to see what different people, and while it's coming up in the chat room, let me know in the chat room where you're at. I want to share what Neil and I were doing. So I went to America. Everyone knew that saying, when there's blood on the streets, there's opportunity. I went to America. The American property market fell apart in 2008, 2009. I went for the first time in 2010. I got a bit of a fright, to be honest. I felt that the realtors there would sell their sister or their brother if they could make a sale, and I sort of left after 5 weeks with my tail between my legs because I just couldn't find anyone that I could trust. And I'm going to share with you a golden formula today, like literally a golden formula to success. It's only 2 things. And if you stay with me, I'm going to share with you what those 2 things are. So Neil and I went back a year later, actually 2 years later, to be honest, with another partner of ours, Brendan Brown. And I think very few people of you in the world have done a trip like this. So we flew to America. We only had 12 days. It takes a day to fly there and a day to fly back. We landed in San Diego. We traveled across the country and we flew out from the East Coast. So we flew into the West Coast. We flew out from the East Coast. We've probably seen more of America than most Americans. And we did 8 cities in 9 days. Yes, you did hear me right. 8 cities in 9 days. We would fly into a city. We'd arrive at 8 o'clock. What we'd do is we'd fly into a city at night. We'd arrive at about 11 p.m. at night. We would then find our hotel. We would sleep. We'd then wake up the next morning. We would meet the partner that we were trying to work with. We'd spend the whole day looking at property. We'd then go to the airport at 5, 6 o'clock. We'd get on the next plane and we'd fly. So we started on the west and we flew across the country. So this was us starting on the 25th of April, 2012. And this is in San Diego, probably, in my opinion, the city that I would like to live in California if I did. This was Brendan taking pictures. We were looking at apartment buildings. This was us in Phoenix. You can see 27th of April, 2012. And I think what we all got a surprise by, certainly Neil, Brendan, and myself, was all these signs everywhere: HUD homes, properties for sale, foreclosures. We then made our way across and we sort of went from California to Phoenix. Neil very kindly organized us to go look at properties with Dr. Dolph DeRuis. Then we moved across to sort of Memphis and then Atlanta. I mean, these were sort of houses in Memphis, boarded up. Then we went to Atlanta. You had these beautiful houses. And can you believe it? This house here, I mean, look, Neil's standing outside with a guy called RJ. This house probably was retailing for $80,000 in 2012. I mean, Neil, yes or no? Cool bullshit. You were there?
Absolutely, Scott. No, I mean, the prices were unbelievable. And, for the quality of properties at that time, it was incredible.
I mean, this was us. If people think it was a nice trip, it was lots of fun looking at property. But I mean, these were all the foreclosed houses. If you can see my mouse here. And RJ and Neil, Brendan and I were driving around in a car, literally going from foreclosed house to foreclosed house. These were the type of houses that we were buying for $80,000, $90,000. I mean, it's unbelievable. This was Brendan sort of knocking on doors. It was amazing. Like, you're dealing with foreclosed houses. You're trying to get into them, trying to see the, you know, the quality of the property before you go to auction and actually buy it. Then we sort of made our way across to New York, and you might notice a complete change in properties between San Diego, where it's apartments, to sort of Phoenix, where it was houses, Memphis, Atlanta, houses, back to New York, you know, old school brick buildings, lots of renovation. You can kind of see here, we're in New York. Then we sort of made our way down. Again, you can see Neil and Brendan. This is actually a video, to be honest, where they both, because we were trying to gather as much information and meet the right partners as well. And then we go to Orlando, and we're looking at apartments. You can see us outside Walt Disney World there. Again, Neil looking at more houses. This was the boys out on the town in Manhattan. And this, I had to put in, it's not a great picture of me, but I tend to joke with people. I feel like a reporter from a news scene, because we were in New York. It was absolutely freezing. And we were trying to give an update on everything we had found in the American property market in 2012. Well, what was really interesting is that within 1 month, I mean, literally, we were there in April, within 1 month, end of May, we had our first event. And you can see here, Real Estate Investor Magazine. You can actually see Neil sitting right there, Brendan and myself put on this event. And, you know, we went around the country, Durban, Cape Town, Joburg, Pretoria. And what was fascinating at the time is that the Rand at the time was R8.52. So I just told you, you're buying properties for the region of about $80,000, $90,000, incredibly nice 4-bedroom homes I just showed you, and you were paying R8.52. And I just did a search today. The Rand is at 19 Rand 80. Okay, so that is like nearly 230, 240%. It's gone up. So I think my first message to you is that Neil's been trying to share this stuff with his community. I mean, he literally came on a buyer's trip. He's not a guy that just writes about it. He's a guy that actually does it. He came on a buyer's trip. He came and looked at all the cities. He did all the research. He wrote articles in his magazine. And, you know, this was literally an event that we did. And here's a little video that we made, the three of us. I think you get the point. And Neil, I'd love you just to comment, because, you know, for me, it's sort of deja vu watching that video. And you came out with this edition in 2013, which was all about the offshore investor guide. There was a whole article that you wrote about crowdfunding, which we're going to talk a little bit about just now. But I mean, what does it feel like for you, to all your participants today? Like looking back at those videos, like literally I'm sharing with you stuff we did more than 10 years ago when property was $80,000, $90,000 a property. Now those properties have doubled in price in dollar terms, and the rand is more than halved. So all those people you saw that bought properties on those trips have 4 times their money in rands. What was your thoughts, Neil, looking back?
Well, my biggest thought is regret. Not getting 20 of them. I mean, no, Scott, I think on a serious note, I mean, it really was an eye-opening tour. I mean, from the day that we met RJ Polano, right from the first time, and just how he operated and how eyes opened up to this market sector, our timing couldn't have been better. And I think, and really, I think the opportunity for the South African investor to invest offshore in a currency that is shown just now how it's more than doubled. Everybody, I understand there wasn't one investor that lost their money that took action on that particular moment in time. So, and despite, not having, even if you didn't get any rent or anything, from the capital growth perspective was incredible returns. And so, yes, it was an amazing experience. I think it was probably once in a lifetime offer. And I think, we can go back to people to say, well, why didn't I invest? When is the best time to invest? I would say the first answer is 20 years ago. The second answer is, when is the best time to invest? And that is today. And I think a lot of us got caught in that trap. So that's my kind of like wrap up of all of it. But I think it was an incredible experience to be able to be exposed to all those areas and to present those opportunities to investors.
Yeah. No, well, I just want to celebrate you and everything that you've done in the space of trying to educate people, because, and I want to take people back. I want to ask them a question. And I don't know, people, engage with us, what were you doing 10 years ago? Now, I'm specifically asking you about 10 years ago, because as Neil's just shared with you, we were doing this more than 10 years ago. And what's really interesting is that there's a saying by Tony Robbins that I love, and that's that people overestimate what they can achieve in a year, but they underestimate what they can achieve in a decade. So if you take looking back by 10 years, and it's about making decisions for you and your family today, your future 10 years is equally as important. Your future self is looking forward 10 years and going, imagine you could, go 10 years in your future and look back and go, wow, like, I made a decision, that day I watched the recording or were live on the thing, and ultimately a difference. Let's jog some memories of what was happening 10 years ago. So the first thing is, in December 2013, Nelson Mandela was actually passed away, the great Nelson Mandela. Edward Snowden came out with WikiLeaks, and there was this whole change around the world in terms of people wanting truth and transparency. And if you're a parent, how could you forget Frozen in terms of what is actually happening here? When you look at the investment space, the stock market had its best annual performance since 1997, growing 30%. The IT stocks surged by 38%. The NASDAQ was the best performing market in 2013. Twitter IPO'd at $26 a share and went to $44 a share the same day, 73% increase. The US Federal Reserve continued with its monetary policy of quantitative easing, which basically meant it was buying government bonds and mortgage-backed securities and trying to support economic growth and keep interest rates low. Bitcoin started the year at $13 and ended the year at $1,100, an 8,000% increase. Who would have liked to have bought some Bitcoin in 2013? Twitter's IPO plus the huge boost of Facebook and LinkedIn, it got investors involved in technology stocks. There was a strong recovery in global stock markets around the world, and it was the best performing year since 2008 and the crash. And then what a lot of people forget about, and by the way, this date is coming up soon in June as well, is that the US government didn't vote to extend the budget, and the Congress failed to vote on it, and all the federal agencies closed 10 years ago. So a lot of people think it's the first time. It ain't. It's happened lots of times in the last 10 years. A couple of things that'll make it more personal for you. I bet you weren't using Uber. Uber had started in America, but it wasn't in South Africa, so the chances of you using it were very small. Airbnb, once again, bet you hadn't even heard of it. I bet you that 10 years ago, you didn't think you would catch a lift with someone off your cell phone and that someone would stay in your house and make you money, or you'd go and stay in other strangers' houses and, around the world. And what about crowdfunding? In 2013, the SEC came out with the regulation changing and legalizing crowdfunding, and it completely changed the way that money could be raised using specifically online and community. We'll talk a little bit more about that. As you can see, Neil was telling people about this in 2013 already as well. What was quite exciting for me 10 years ago, and Neil deserves a huge amount of credit with this because it was actually at one of Neil's events. I'd been watching Clem Santa for the best part of a good couple of years. I'd been to his presentation many times, and he always talks about scenario planning. And what fascinated me was that what's the point of having all the scenarios without having a way to make a decision? So I know I'm not normal, I accept that, but I went home and I kind of created a 4-dimensional model. And I was actually invited to present with Neil and Clem Santa at a live event. And I'd done it about a year before, but I was too embarrassed to share it with them. You know, when you build something, you're not really sure if it's any good. And at the event, I actually shared with Clem Santa this model. And he literally got back to me 2 days later and he said, Scott, this is a really powerful model. You should write a book. And little did I know how hard it was to write a book. But when Clem Santa, one of the top 5 strategists in the world, says, I'll write the foreword for your book, you kind of do it. So I was super excited in 2013. We launched Property Going Global. It was interesting because that's the year that Nelson Mandela passed away. And the very first thing I had in the book was money won't create success. The freedom to make it will. And that's what I was doing 10 years ago. And what's really, really interesting is that 10 years ago as well, another person who works closely with ourselves, and I know Neil's worked with him for a very long time, is a guy called James Painter. And he wrote chapter 2 of the book, which was all about currencies and forecasting and where are currencies going. And it's such a funny story because we were in Durban, it was 2013, literally 10 years ago. And a guy had bought a house for $80,000. He was a very, very sophisticated property investor in Durban. And he bought it for $80,000. I'll never forget the property. I can't mention the gentleman's name. And he bought it. It was R8.80 to the dollar at the time. And I remember he came to me, he'd already signed all the paperwork, but he pulled out of the deal. And he said, I've spoken to my banker, and my banker says that the Rand is going to be R8 by Christmas. This was like April, May time. I was like, really? So we were actually live at an event with James Painter. And I've been working with James already for quite a long time then, and I was super impressed by his ability. And so I literally said to him, James, what's your opinion on the Rand? It's at R8.80 now. Where do you see it going? He said, it's going to go above 10 Rand to the dollar. And I said, how quickly? And he said, within about 3 months. And I said, what probability? And he said, with about a 90% probability. Well, what was interesting is that guy pulled out of the deal. He listened to his banker's advice. James was right. Within about 6 weeks, the Rand went over 10 Rand to the dollar and has never recovered below 10 Rand to the dollar. And that gentleman has lost somewhere between 4 to 5 times his money because the Rand has not only halved, it's nearly 2.5 to 3 times, devalued, but the property's doubled in value, plus he would have earned income for 10 to 11 years. That is the power of getting the right information. It is critical to get the right information, not what your mate, your brother, your banker, your broker says, the right people with the right information. So what are we doing here today right now? Well, it's about turning money into globally diversified passive income. I'm going to do 3 things for you. I'm going to prove that diversification is the single most important component to financial success. If you're doing a thesis, when you're doing a master's or a dissertation or something, it's literally called a hypothesis. Like, this is my hypothesis, like the diversification is the single most important component to financial success. I'm going to help you unlearn the things that are stopping you from doing it. And I'm going to specifically show you where to get the information. The one thing that, having done this with Neil for a long time, we want you to walk away today with value. And so we'll literally share with you where to get the right information. So I've been studying lots of wealthy and successful people for most of my adult life, but there's 10 people probably that I follow most. And I wanted to share with you, my partner and I, Shane, went and literally researched what they had to say about investment. So number 1 was Ray Dalio. He said, diversification is the single most important component to financial success. He's got a book that I highly recommend called Principles. And in that book, he literally says you need to diversify across asset classes, within asset classes, across markets and currencies, and across time. Now, just to put in perspective, this guy has run the largest hedge fund in the world for $160 billion. He started it 40 years ago. You need $100 million just to be able to invest directly with him. And he never shared his secret formula. And yet, at the age of 75, and I'll share with you just now why he did it, but he finally shared his secret formula. And when you read this, it's going to sound super complicated, because he literally said, you need 15 uncorrelated bets in an attractive array of assets that don't move in tandem. That will reduce the risk by 80% and increase the risk-return ratio by a factor of 5. Now, when you first read that, and even if you've watched me present before, you'll probably, it sounds a bit gobbledygook. But actually, all it's saying in simplicity, perspective, is you need 15 quality investments that don't move in tandem. That's all it's saying. 15 quality investments that don't move in tandem. If you do that, you'll reduce your risk by 80%, and you'll increase your risk-return ratio by a factor of 5. It was interesting. There was a TED Talk, and we're dealing with a lot of uncertainty in the world at the moment. There was a TED Talk where they interviewed Ray Dalio, and they said, what do you and I do? What do the normal people out there do in terms of the markets and investing? And this is what he had to say.
So what the individual investor needs to do is know how to diversify well. So the word that I would know how to diversify well and in a balanced way, to diversify it in asset classes, to diversify it in countries, to diversify it in currencies, to know how to diversify that well so that you have wealth diversification is important. Do not think that cash is a safe investment. Cash is almost always the worst investment. So you have to think about that. You should think a little bit unconventionally. Diversify well, be humble, don't market time, and be conscious of the dangers of cash.
So around 26 minutes, you can go literally Google Ray Dalio TED Talk. He said the most important thing for an individual investor is to know how to diversify well and in a balanced way. You need to know how to diversify in assets, countries, and currencies. Knowing how to diversify your wealth is the most important thing. So I think that probably proves point number 1. What about point number 2? Well, the second biggest finance house in the world, Vanguard Group, was started by a guy called Bogle. He actually invented the ETF, which is the exchange traded fund, which is effectively the most cost-effective way for people to invest in the stock market. They manage $8 trillion. And this is what they had to say. According to a study by them, diversification can reduce risk by 70% while maintaining a similar level of return. What about number 3? BlackRock, the biggest finance house in the world. They manage $8.66 trillion. And they said investors who diversify across asset classes, regions, and sectors may experience better risk-adjusted returns over the long term. The report also notes that the benefits of diversification are so fundamental that they are some of a few things investors can rely on with confidence in a rapidly changing world. What about number 4? Well, I had the privilege of actually going to Fiji with Tony Robbins back in 2010 to do business mastery. Now, if you don't know who Tony Robbins is, Accenture deemed him one of the top most 100 influential men in the world in the 20th century. And what's really interesting with him is he's a business/performance coach, but what he's really good at is pattern recognition. And he literally was so irritated in 2008, 2009, because the global financial crisis happened and 10 million Americans lost their homes. And his logic was, well, they're all the taxpayers, and the tax money was put into the banks who created all the problems. And, yet 10 million middle-class Americans went bankrupt. So he went out and went on a bit of a rampage, and he went and interviewed 50 of the wealthiest people in the world. And he came out with this book, Money Master the Game. Like, not what are the theories of money, what are the 50 wealthiest people doing in terms of it? And just by the way, one of those people was Ray Dalio. And finally, at the age of 75, Tony Robbins got Ray Dalio to share his secret formula of how he had been so successful over the last 40 years. He then followed the book up with this book, which is Unshakable. And we took these books and we summarized them for you. Now, just before I give you the summary, one of the things that I found was really interesting is that 96% of fund managers fail to outperform the market. 96%. Yet they make money, whether they make you money or they lose you money. That's like paying someone to go to Vegas or the casino. You pay them anyway, but they only make you money 4% of the time. They lose you money otherwise. That makes no sense. Right, what were his principles? Firstly, diversification is essential. Secondly, asset allocation matters. We're going to talk quite a lot about asset allocation today. Don't over diversify. So, you know, Ray Dalio said 15. He didn't say 50. He didn't say 500. He didn't say 5,000. He said 15. So, you know, if you put your money into mutual funds and whatever, you're investing in thousands of companies you don't even know. Don't over diversify. Seek expert advice. Stay informed and be proactive. And then automate your investments and tap the power of compounding. You know, we're going to talk about it today, but I've got a smart watch. I've got a smartphone. I've got a smart laptop. I've got a smart TV, a smart fridge, and so do you. Why are you not using technology and smart investing to help you get ahead over the next 10 years? Point number 5, there's a guy called Jim Rogers. Some people know about him, some people don't. At the age of 37, he retired as a US dollar billionaire. He was one of the partners of Warren Buffett, and he actually holds the Guinness Book of Record for riding the furthest way around the world on a motorbike. So in 1987, he rode all over the world, and he rode down through Africa, and he stopped in Botswana. And my uncle had actually started the Botswana Stock Exchange. And so in 2013, 2014, my uncle managed for me to actually meet with Jim Rogers. What an incredible fellow. And this was me in his house in Singapore. And I actually had his book here and he had my book. It was quite exciting. We're both pointing to places on the planet that we thought we should be investing in. But when you study what he has to say, he believes in concentrated investments. Diversification is something that brokers came up with to protect themselves. Long-term focus. Rogers emphasizes a long-term investment horizon, identifying opportunities in undervalued or overlooked markets. And then skepticism of traditional diversification. Rogers has expressed skepticism about the efficacy of traditional investing. And a good example of this, you know, in the 80s, the kind of traditional stock market was all about America. And he was like, no, there's much bigger, greater opportunities out there in the world. He rode through Africa, he bought shares in Botswana. He thought that the future of the world really was China. He moved his entire family to Singapore, you know, so that they could be close to China and learn Mandarin. And the only reason he didn't go to China was due to health reasons. So it's really, really interesting how this gentleman has followed his own advice and invested. But you'll notice a trend here over and over again from these top people. Number 6, Richard Branson. I had the privilege of spending 2 weeks on Necker Island with Richard Branson. Now, he's probably one of the most respected entrepreneurs around the world in terms of the space of diversification. He's got over 400 companies, 8 of which have been US dollar billion-dollar companies in different sectors. And what he had to say about it is you need to focus on your core strengths. Secondly, you need to have an entrepreneurial mindset. There's always going to be risks. You need to take calculated risks. And ultimately, it's about learning how to manage risk. And then you need to build a diversified business empire. And I think he's, epitomized that more than most people. What about number 7? Well, interestingly enough, this is the gentleman I've already mentioned that I actually met through Neil. Where's his book on? Dr. Dalton Russ and Real Estate Riches. I read this book 20 plus years ago. If you've read this book, it literally says, go out and buy, look at 100 houses, residential houses, make an offer on 10, get accepted for 3 and buy 1. And, I've invested a lot of money in my education and my learning. And you've already seen the pictures of Neil and I over in America. This was us with Dr. Dalton Russ in Phoenix, literally on one of his buyer's trips. I think, Neil, you actually organized this buyer's trip. And this was us. We spent, a lot of money to be on this trip. This was us on the steps of Phoenix, actually buying properties. So these were the auctions, believe it or not, literally on the steps of the courthouse where you would go out and you would buy, properties off the auctions. And this is what Dr. Dalton Russ has to say. Real estate as a diversification tool. So rather than just putting your money in the stock market, use real estate as a diversification tool. You need geographic diversification. You need different property types and strategies. You need risk management. So you notice the pattern is coming up over and over again. And this is a video where I literally recorded Dolph and asked him, what do you think about people and where should they be investing?
You've traveled the world, been around the world 100 different times. I think you said the other night at the presentation we went to, the world's going global. Tell us a little bit about what your thoughts are. 10 years ago, property was very much a case of I lived in Phoenix, I bought a house in Phoenix. I lived in Johannesburg, I bought a house in Johannesburg. And with the advent of the internet and access to information and cheap flights and all that sort of stuff, it's going global. The bottom line is people are interested in returns in different areas. You can get a far better, possibly a far better deal here, better yield, etc. So now suddenly, well, should I invest in Joburg? Should I invest here? Well, it actually comes down to numbers.
It does come down to the numbers. If you live in Joburg, I would say get your first investment property in Joburg. Probably get your second one there. You've got to cut your teeth on it. You've got to learn the ropes. You've got to learn what it takes to be a good investor. But if you've got 10 properties in Joburg and you're looking at buying an 11th, I, for one, would say, don't buy it in Joburg. Buy it in Cape Town. Go to Port Elizabeth, go to Durban, go to anywhere else. And once you've got a few more, I would even say it's time to think about going global. And you South Africans know the answer to this better than most nationals of any country, because you've suffered from the ravages of what can happen to the rand. And I'm from New Zealand originally. We had it there too. We had exchange rate controls. If you left the country, it might still be the law. If you left the country for more than 13 weeks, they stopped your social security payments and your pension and stuff because they didn't want anyone, heaven forbid, to spend their New Zealand dollars overseas. So you need to spread your risk a bit. And if you're going to spread your risk, why put it into a market where the currency is going down, where the population's in declining, where there's no growth? You are far better off investing in places where there is great growth. And I always say it is so easy to beat the average. The average growth rate long-term in this country for real estate is about 9.7%. But don't settle for 9.7. That's the average. That includes little cities that have shut down because they used to have a steel plant or a coal mining plant and they've shut down. They might have negative growth. So the 9.7 is the average. That means there are other places that have high growth. That's why, as we said before today, if you invest in Las Vegas or Phoenix, you will beat the national average by a wide margin just by picking those cities. So let's say we're talking about Phoenix. You don't even have to pick a house at random here because there are suburbs that for decades have grown at faster than the average rate and other suburbs that grow at less than the average rate. And these stats are easy to come by. You compare that to stocks or shares or whatever you call them. It's very hard to pick something, a market sector that has higher than average growth. They used to say it was technology stocks, and then we had the technology crash, and then they said it was bio, whatever, and then that crashed. It's very hard to pick, and it doesn't tend to have those trends for a long term, but real estate trends stick around for a long time. So yes, invest overseas to hedge your bets. And if you're going to invest overseas, why not pick a fast growing market like Phoenix or Las Vegas?
So, I mean, that was literally a video you saw Neil, myself, and Brendan with Dolph in Phoenix. So I think that's fairly self-explanatory. What about number 8? Well, most people that have been in the space for a long time, you would have to include Robert Kiyosaki and Rich Dad, Poor Dad, and the whole employee, self-employed business owner and investor. What does he have to say on the whole thing? Well, focus on education and financial intelligence. That's really, and I want to applaud you for being here today because it's a very good start if you're actually investing in yourself. Warren Buffett says the number one investment that you can make on this planet is in yourself. Cash flow over diversification. So again, what a lot of middle-class people do is they chase capital growth. They put their money in the stock market or crypto, and they're sort of chasing capital growth. But cash flow is what gives you freedom. Invest in what you know. So don't go and try and do 500 things. As Ray Dalio says, rather try find 15 things and actually know what you're doing. Be aware of the risks over and over again. And alternative investments. So, Robert Kiyosaki's always been very sort of against the stock market and saying, you should be looking at alternative investments, property, real estate, residential, commercial, gold, silver. He's even into oil as an example. What about number 9? Well, from homegrown South Africa, Clem Sunter, one of the top 5 scenario planners in the world. He actually helped with the change of the free government to Nelson Mandela. He's got many, many books, but books people, remember are The Mind of the Fox and Thinking the Future. And this is what he had to say. Economic and business diversification. Diversifying income sources or business activities can help mitigate risk and increase resilience. Long-term outlook. Sunter emphasizes taking a long-term view when considering diversification. Considering of multiple scenarios, this approach enables individuals or organizations to prepare for uncertainties and adapt to changing circumstances. And then collaboration and partnerships. Sunter often emphasizes the importance of collaboration and partnerships in diversification efforts. And I think this 4th one is probably the most important one because for me, it's the language of the 21st century. Collaboration and partnerships is the only way to succeed, and specifically when it comes to diversification. What about number 10? Well, we wouldn't be able to finish off without Warren Buffett. And he's got many books, but one I highly recommend is called Snowball. Now, when I talk about investing, the very first thing that educated investors will come back to me with is, oh, but Warren Buffett says diversification is protection against ignorance. It makes little sense if you know what you're doing. Interesting, because if you actually go and look at what he's saying, and you analyze books like Snowball, he's saying that you need to have concentrated investing. So he's saying exactly the same thing as Ray Dalio. Don't have 500 or 5,000 things. Ray Dalio says 15. Warren Buffett says concentrated. Secondly, have a circle of competence. I'm going to talk to you today about having the right information and the right partners. Don't go into things that you don't know what you're doing. Quality over quantity. I think that's probably self-explanatory. Have a long-term perspective. Again, self-explanatory. And then risk management. Warren Buffett's got a great saying. Rule number 1, don't lose money. Rule number 2, refer to rule number 1. So that's their philosophies. But what about their results? Ray Dalio, he manages $160 billion. And literally over the last 40 years, he's managed to achieve a return, an annual return of 21% a year. Now, just a quick one. Chuck it in the chat box. Who here would like to earn 21% a year over 40 years? Okay, now this is quite important, because if you earn 21% a year, you're going to double your money every 5 years. Double your money every 5 years. So I'm interested. Chuck it in the chat box, because, Shane would like to. I want to see a couple of other names coming up. Sarah would like it. Paul would like it. But what's interesting to me, I don't know, maybe people can't find the chat box, but what I find really interesting is that if you wouldn't want this, then I don't understand. I truly don't understand, because 21% is well above market average. And he's literally done this for 40 years in a row. And he's shared with you a simple formula. Now, you can go and figure out your own formula, or you can literally copy it. Rosa, if you literally want to, achieve these results, you can literally copy, his formula. And it's 15 quality investments that don't move in tandem. What about Vanguard? Vanguard's ETF over the last 30 years has obtained a 9.8% return. So I'm not interested in what you did in the last in the last year. I mean, how many times have you walked through an airport? Is there like a fund manager going, we're the fund of the year? They don't tell you that they failed for the 5 years before that. You've got to look at what people have done over 10, 20, 30, 40 years. That's where it becomes important. JP Morgan, this is really interesting stats. So again, over 20 years, REITs, which are real estate investment trusts, have returned about 11.2%, equity about 10%, the S&P 500, which is the top 500 companies in America, about 9.5%. Just by the way, the average investor trying to do it all on their own, 3.6%. What about all the major banks? Now, I don't have time to explain this to you. As part of our mastermind, we work with a family office, and every month we analyze the different asset classes and what's going up and what's going down. But if you look at the returns of all the different asset classes over the last 10 years, and let's just take equities. So you might say, because most people are just in the stock market, and they're like, in this year, it's like, I'm up 18%, I'm down 2%, I'm down 1%, I'm down 14%, I'm up 37%, I'm down 14%, I'm up 18%, I'm down 2%, I'm down 19%, I'm up 2%. I think you get the point. And if you know how to read these charts, you can also notice patterns of how stuff goes up and how stuff goes down. Portfolio construction equals 85% of your overall return. Cambridge Associates. So again, if you look at the difference between equity, stock market, and private equity, literally over 5, 10, 15, and 20 years, the dark blue is the stock market and the light blue is private equity. Look at the difference over every time frame. What about Bloomberg, Barclays, and Cambridge Associates? So this is a really interesting graph. And again, I learned this first from Clem Sunter. Look at the bottom here, it's risk. So from left to right, this side over here is very low risk. This side over here, very high risk. Over here, this is low return, this is high return. So you want to be in this top left corner, because where my mouse is, this is the highest return with the lowest risk. Now, yes, you were taught by everyone in the finance world that you want to go for literally high risk, high return, rubbish, absolute and utter rubbish. The problem is most of us have our money in kind of stocks and bonds, and therefore we're at the highest risk, lowest return. Whereas there's actually a better formula in terms of how people should be doing it. What about wealth migrate? Well, we've been doing this for nearly 10 years now. It'll be 10 years in October. And what's really interesting there is that on average, people have got a cash on cash return of 7 to 8%. And if you take an internal rate of return, which includes capital growth, you've got somewhere between 13 to 15% with an average of about 14%. So if the hypothesis was that diversification equals financial success, can we agree that if we look at all of those 10 people plus the track record, that it is a given that diversification equals financial success? And if anyone disagrees, please tell me. I'm happy to have the debate. Now, if we assume that that's a given and that's a formula, and someone like Ray Dalio is saying it's really simple, it's 15 quality investments that are not tied together, then my question is, what's in your way? And there's 5 myths that hold people back. The first one is that global investing is only for the wealthy. Many people believe that global investing is only for the wealthy and requires a lot of money to get started. However, there are many low-cost options available to investors who want to diversify their portfolios globally. There's some great articles here. Kathy Wood is one of the top venture capitalists, female venture capitalists in America, and she says, don't underestimate the little guy. Equity crowdfunding is making private markets public. Even Charles Savage, who's from South Africa, says fractional investing, it represents the future. Retail investors used to be wrong, says veteran Wall Street institutional trader Tiger Williams. Not anymore. Now you've got 50 million of them all tied together. Why platforms? Well, according to the Wall Street Journal, the key advantage of digital platforms is the ability to access more deals and invest smaller sums. Unlike REITs, you can actually invest in particular buildings. And what about Forbes? Well, these platforms do more to provide institutional quality deals, and they excel at disseminating critical information that investors need. And I love this as a testimonial. This gentleman started investing on our platform for $10. And he literally wrote me this, and he said, it makes me feel like a property tycoon. Move over Gary Cardone, he means Grant Cardone, and Donald Trump. So I fundamentally believe that myth is off the table, whether it's Wealth Migrate at $10 or one of many, many other platforms. There's plenty of platforms out there, and most of them have a minimum investment of $10. And therefore, if you literally have $150, you can copy Ray Dalio's formula. Myth number 2, investing in foreign markets is too risky. Some investors believe that investing in foreign markets is too risky because of political instability or currency fluctuations. While there's always some level of risk involved in investing, there are many ways to mitigate risk through diversification and careful research. And this is an interesting one. So when the book came out literally 10 years ago, and I shared in this book how I built the 4-dimensional model, where you can get the right information, and ultimately, rather than opinions, you work on fundamentals, you work on systems, and you work on facts. And what was interesting, if you look at where we started investing in Australia, we literally invested in Australia in 2009. It was the best performing market in the G20 in 2009, 2010. We started investing in England here, we stopped, and then we started investing again in England about this point. And in America, as Neil just pointed out, we literally called the bottom of the market almost perfect in terms of within 3 months of the bottom of the market, we started investing. Now, if you get it right once, you're lucky. If you get it right twice, maybe it's a fluke. But if you get it right over and over again, it's not that I've got a better crystal ball or we've got a better crystal ball. It's just about knowing where to get the right information. A good example of this gentleman, Michael Honeysett, came on a buyer's trip 10 years ago. Now, just to put in perspective, 10 years ago, if you want to do this and you saw pictures of Neil and I in America with lots of people, they would fly to America. They would, well, to be honest, like what Michael did, he bought my book, he read it, he came to a live event, he then flew to America with us, he paid quite a lot of money to come on a buyer's trip, and then he, bought some houses. And he was very skeptical. He said, it sounds too good to be true. And he literally came on a buyer's trip to America to see it. And he ended up investing. And I'll never forget, he was so clear on his why. He said, I want to make sure that I can build a globally diversified passive income so that my daughters have the freedom to live where they want and to do what they want with their lives. And I'm really, really excited and grateful that 10 years later, Michael and his family are immigrating to England. His daughters are free, they've got their passports, and they are doing whatever they want with their lives. And, you know, the money that he invested to come on that buyer's trip, he said, when I joined it, it was the best money I've ever spent. It's too difficult to invest in foreign markets. Investing in foreign markets may seem daunting to some investors, especially if they're not familiar with the language or customs of the country. However, there are many resources available to help investors navigate the complexities of investing globally. And what's interesting to me is that a lot of people think that, you know, America speaks English, Australia speaks English, England speaks English. We can go invest in all three of those markets. They speak the same language as us South Africans. Rubbish. Just the word transfer, so when a property transfers here in South Africa, is completely different in all three of those markets. You literally have to have a translator to be able to understand the markets. And so, although it's complex, I actually believe that the way to manage risk, having now done this for 24 years myself, it comes down to two things and two things only. And I call it the golden formula. You've got to have the right information and the right partners. The right information and the right partners. And that's why I love working with Neil, because he's always out there trying to share with you who is the right information and the right partners. I'll give you a good example of this. Ryan Boyter came and started investing with us in Australia in 2009. I told you already it was the best performing market. He bought 5 houses there. And about, I don't know, middle of 2014, 2015, he actually immigrated with his family to Australia and is now set up on the Gold Coast. And, you know, again, he was in the right markets, the right sectors, and really experienced that growth within the market. Global investing is not necessary. Some investors may believe that they can achieve financial goals by investing only in their home market. However, by not diversifying their portfolios globally, they miss out on the potential opportunities for growth and may be more vulnerable to economic downturns. So I personally don't believe that there's arguably more growth somewhere else. I fundamentally believe if you understand your own market, you can probably get better returns. I believe it's more about wealth protection and managing the downside. And a lot of people think this is a South African problem. It's not. If you'd invested all your money in Las Vegas in, you know, before 2008 in residential houses, the Vegas market lost 70%. Imagine owning a house that was worth, you know, $100,000 and now it's worth $30,000, or even R1 million and now it's worth 300,000 Rand. I mean, that's terrible. You would have felt like an absolute class clown. If you invested in England in commercial property, you had all your money in English commercial property, and then you had Brexit, it lost 20%. Or even Dr. Dolph de Roos had 8 commercial buildings in Christchurch, and he talks about it a lot. And it was a highly successful investment until an earthquake came along and literally, you know, took out all 8 buildings. The government deemed them to be unusable. And so he went along to the insurers and he said, well, don't worry, I'm insured. You need to pay me. And the insurer said, no, sorry, act of God. And it literally bankrupted him because he had 8 commercial buildings all in one place. Diversification is key to all investors. And, you know, that's why we wrote this book back 10 years ago, because 80% of people that try and diversify and invest internationally lose money. And I was sick and tired of it. And again, someone like James Painter, you know, did a presentation last year where he believes that the stock market could lose anywhere from 50 to 85% over the next 5 to 10 years. Now, that's something significant. Like, we as investors should be looking at that. You know, when it takes into account currency, and I've told you his stories, you know, he works with our wealth hackers and he gives them a monthly report every single month on where the currency is going, what's happening with the stock market, what's happening with commodities, even what's happening with cryptocurrency, so they can make better decisions in terms of their investment. And I'll give you another real story. In 2008, 2009, the property market in England lost about 20%, the residential market. And most people tend to focus on this stage of the graph. But what you need to do is focus on the fundamentals of what's actually going on in the market. And a great example of this was this building here at City Peninsula. I was actually talking to this developer, a guy called Gary, last week. And we helped 31 people invest in this building. This guy here bought 4 units. He got them at a 26% discount. And he bought them at £313,000 each. Last year, he sold them for over £1 million each. And he had a positive income the entire time. Now, who here would like to buy something for £313,000 and sell it for more than £1 million 10 years later? Plus earn a positive cash flow income. over 10 years. Now, the question is, you've got to ask, well, were we lucky? And the question is, Justin's saying all day long, I agree with you, Justin. And people, say, oh, but you were lucky. No, we weren't. It's about having the right information, the right partners. This article came out last year. It said Night Dragon is putting 8.4 billion into Greenwich Peninsula, which is where that building is. There are 17,500 homes coming, 84,000 square meters of commercial and retail, and 20,000 square meters of cultural attraction. On top of that, there was a tube. It was a long-term trend. If you've got the right information and the right partners, then it's easier to predict where things are going. And the last myth that holds people back is I don't know how. If I had $1 for every time someone said, I don't have the time, I don't have the money, I don't have the knowledge, I don't know how. Well, I want to simplify it for you. If everything today is sound complicated, there's a simple goal. The goal is to build globally diversified passive income. That's why it sits right in the middle. This is not my opinion. This is copying the formula of some of the wealthiest investors in the world. What have you got to do? You've got to diversify across countries, currencies, assets, partners, and time. That's it. Diversify across countries, currencies, assets, partners, and time. And I want to share with you, whether you want to invest in America, England, Europe, Australia, South Africa, or quite frankly, anywhere else. We've been helping investors now do this since 2004. We've helped over 4,000 investors achieve whatever their goals were: wealth protection, plan B, peace of mind, diversification, passive income, freedom, global citizen, empowering your children, immigration. We don't really mind what it is. What we care about is helping people have the freedom, living a life unlimited, the freedom to make the decisions that they want for them and their family. Our track record, we've helped people in 178 countries, facilitated about $1.3 billion worth of real estate investment, over $100 million in actual cash, and we've paid back over $30 million in exits and sort of dividends in terms of that return. And what was fascinating for me is that through all of that time, that golden formula just keeps coming and getting stronger and stronger and stronger. It's about getting the right information and having access to the right partners. And that's how you unlock this formula. So I want to share with you quickly so that you can get real value out of the session. This is a multi-layer because obviously you've got residential, you've got commercial, and you've got other alternative assets. But I want to share with you where to get the right information for countries, and I want to share with you where to get the right information for currencies. So if I go to my screen here quickly, and you go to the IMF, and just by the way, I hate it when I watch presentations and they don't share us all the resources. So we'll share with you just now how you can get the resources and also watch the emails from Neil because he can email them out to you. But here's the IMF with the entire residential global housing market. The best research I've found is on The Economist. You can get 3 articles from The Economist for free, and then you have to pay. So I pay because I use this quite a lot. But you can literally go in and you can analyze all the different property markets around the world. So you can go back as far as 1970, right through to today. And what's interesting is you can look at all the different markets: South Africa, New Zealand, Canada, Australia, Britain, America, you name it, they're all here. And you can compare like for like. You can also have real prices versus nominal prices. So something might look really nice until you take inflation into account. Then you can look at it based on income. So one of the things that has a big impact on whether property is going to go up or down is how affordable is property. So as an example, in Australia and England, affordability is a major issue. And that is a ceiling or a headwind when it comes to price inflation. And then something I learned from Dr. Hannes Dreyer 20 years ago is that every property in the world, whether it's residential or commercial, should be valued based on income. And you can literally look. So rather than having an opinion, look at the data. Let the data tell you where the best results are. Then if you want to go and look at global cities, that was countries. Now you can look at cities. And it's the exact same logic in terms of literally going through the cities and being able to choose all the different data, nominal income, etc. If you want to go to America, and now you say, right, I want to invest in America. Well, which city? There's 300 cities in America, MSAs, metropolitan statistical areas. Where do you actually start? And then the same for England. And I don't know why this interactive graph's not working. I have let them know, but they do have an interactive graph for England. Now, if you're wanting to go to England and you're wanting to invest in England, the best data is Academic Metrics. There's 7 indices in England. quite a few of them are run by the banks like Nationwide. And that's a problem because 50% of properties in England are owned cash. So you want to go to Academimetrics that gets all the data from the deeds office. And they write a report every single month. If you truly want to understand what's going on in the UK market, you go to Academimetrics, it's free, and you can read their report every single month. If you want to do Australia, you go to CoreLogic, and you've got their news and research, and you can literally see exactly what is going on in the Australian residential property market. If you want to go to America, it's S&P CoreLogic, the Case-Shiller Home Price Index. And then in South Africa, actually, when I wrote this book, it was the ABSA Housing Index, but it's now changed. FNB is where I believe you get the best information, probably other than Real Estate Investor Magazine, Daniel, in terms of that process. So I've shared with you today, like where to get the right information. So whether you want to work with Neil and myself or not, that's your choice. We've literally shown you where to get the right information, and we'll share that resources with you. What about where to get the right information with regards to currencies? So if you go here, and again, I go to James Painter. So I actually pay a subscription for James Painter. So this is quite detailed and analytical, but you can literally see what's happening with currencies on a day-to-day basis, on a short-term weekly basis, on a couple of months basis, and then over the next couple of years. Now, I don't have time to go and explain all of this to you, but it's ultimately like forecasting based on the weather. When I pick up my phone, I don't know how the weatherman does it, but I do look at like whether it's going to rain tomorrow, whether it's going to be sunny, and it helps me plan my day better. So, I find this very, very useful. And for our wealth hackers, literally we have a much more condensed version because you don't need that amount of detail. And they bring out about every 6 to 8 weeks, they bring out a forecast in terms of the process. Sorry, I don't know why this is not loading. But ultimately, it's making me go in and do everything now. But anyway, they bring out this report because again, as a property investor, you don't need to have day-to-day analysis, but you do need to kind of know where things are going over the next couple of months in terms of the process. What have I done wrong here? Anyway, let me move on. I'm conscious of time in terms of that process. So we've shown you where you can get the right information. I believe that's the best information with regards to currencies. So Neil, I want to kind of invite people, hopefully today we've added as much value as we possibly can, and it's about sharing the right information. And, 10 years ago, I wrote this book, and, Neil would very kindly help me promote this book 10 years ago, and Clem Sunter, etc. But what I realized is that when I wrote this book, I tried to make it evergreen. I hated writing a book. It took 18 months, and I thought I would never have to, actually get this, never have to write this again. But so much has changed in the last 10 years. So much has changed in the world. I've changed a lot. In 2014, I started investing in commercial property. And I remember actually reading, Dolph DeRosa's books, and he always said, whatever you do, you've got to get into commercial property. And I always had excuses. I couldn't get into it. But anyway, I did in 2014. And then I started investing in other alternative assets in 2019. And it's been a game changer for me. And so not only has the world changed hugely over the last 10 years, but I've also evolved hugely over the last 10 years in terms of that process. And that's why I'm super excited to share with you Wealth Going Global 5.0. So it's basically the digital upgrade. And, 10 years ago, we literally wrote a book. It took about 18 months to write the book. Now we're doing a digital upgrade and a digital course. It's much, much easier. We can update it quicker. And, it's where the world is now. If I took 18 months to write a book, it'll be out of date by the time it was even finished. So, but we're not just going to be focusing on residential. We're also going to be focusing on commercial. So property, residential property, commercial property, and other alternative assets. We're going to be covering how to find the right countries, the right currencies, the right assets, the right partners, and ultimately how to invest in the right time. And one of the key things that I've learned is that if you take this book, according to research, 96% of people who buy this book will not finish or read this book. And so I'm not interested in that. I'm interested in people getting results. I'm interested in people taking action. Hundreds of people were like Michael Honeysett and came to events and heard the information and knew they should do something and didn't do it. They, for whatever reason, had their own excuses. He didn't. He took action, and look where he is. And, if I was in a live room now, I'd say to you, but just answer the question in your head. Would you have liked to have taken the action Michael took 10 years ago, considering where he is 10 years later? Because this can be you. You're talking to your future self now. What will your conversation be like in 10 years? Is it going to be one of more excuses, or is it going to be one of, wow, I'm so grateful that I actually did that for myself? What is it? It's 5 weeks live. It's literally starting tomorrow. So I actually literally put the course back by a week. I've got such a nice relationship with Neil. And he said to me, look, Scott, we can only do this live on Thursday. And so we literally agreed we're going to start officially on Tuesday, but I've got a bonus session for you literally tomorrow for those people that participate in terms of it. And we're going to be running a sequence every single Tuesday around lunchtime, around the same time. So whether you're in America, South Africa, Australia, or England, so Australia or New Zealand, whatever, it can work for you based on time zones. I just want to talk to you a little bit about the bonus session we're doing tomorrow. What I've learned is that everyone wants to know about the how and the what. Like, how do I make money? What do I do? How do I protect my wealth? What do I do? How do I diversify? What do I do? How do I protect my children? What do I do? But what's critically important is the why. I call it the power of clarity. We did this session this week for our mastermind group, and this was just some of the things they had to say. Love this session, amazing session, profound. Thanks, Scott, rewarding, beautiful story. You can participate in this tomorrow. If you literally, I know it's tomorrow, but that's just the way the world works. Things are happening quickly now. So we're then going to start from Tuesday, and there's literally 5 modules. So the first one is countries, uncovering the global market, where to invest. The mission will be to help investors get clarity, 100% clarity on the countries they wish to invest in, and avoid 80% of the mistakes that investors make. We're going to be reviewing Clem Santa's scenarios, so his latest scenarios. Where does he see the world going? We then take those scenarios plus the research, and we stick them into our 4-dimensional model. You can see exactly the same as all those other graphs. You've got risk and return. And then when you put in the numbers, it ultimately helps you know which countries. And you want to invest in countries that are high return, low risk. Now, specifically, this is the graph from 10 years ago in my book, and it's been updated. Is America still the best place? I don't know. Come and find out how to do it for yourself. We then got a bigger system called GIDS that actually helps us analyze around the world where to invest and how to invest. So what's really important to me is not just about the knowledge. I learned this from Dr. Anastraya. Knowledge is not power. Everyone thinks knowledge is power. It's rubbish. Applied knowledge is power. And so the action steps, each week, there's going to be a small amount of action steps. It'll be to understand the GIDS model. It'll be to review and adjust the country data. And ultimately, it'll be to choose your own countries and fill in your investment strategy sheet. So the goal is, I want you to be clear on the top 5 countries you want to invest in. Then we move to module 2, currencies. The currency conundrum, managing risk in global investment. Now, we're actually doing this. So the mission will be to help investors diversify their portfolio and mitigate risk by investing in multiple currencies. And we're going to be doing this with James Painter. So James Painter is going to be sharing with you how he analyzes the weather patterns. I'm just using that metaphor, analyzing the weather patterns. I don't really care how my car works. I also don't really care how the weatherman analyzes his patterns, but I do care how to use the information. So he's going to show us what he does and then how we use the information. And we've got a thing called the Global Wealth Index. This was something I did for people in Singapore, and it basically helps people know where to invest, when to invest. Same for South Africans. And so the action steps here are understand the Global Wealth Index, understand where to get the accurate information, because obviously it updates all the time, and then choose your top 5 currencies. So you've got your top 5 countries. Now you choose your top 5 currencies. What about module 3? Assets. Build your global portfolio, selecting the right asset for your investment. The mission will be to help investors understand the top 15 assets that they would invest in without losing money or spending decades of time researching through trial and error. I mean, if you consider what Neil and I did, more than a decade ago, we flew all around America. We went and met all those partners. We all leveraged on our different resources so that we could get access to the right partners. You could spend 24 years, like I've done, trying to figure it all out, or you could literally, work with Neil and I, and we can actually share with you, how to get the right information, how to find the right partners. Because as Ray Dalio said, it takes 15 quality investments in different assets, and that's all you need. So we've got a bunch of different tools we use. If it's in residential, we've got a 100-layer system. If you're investing in South Africa, Australia, or Timbuktu, this is a very strong calculator to help you make the right decisions. If you're doing due diligence on commercial, There's a 132-point system to figure out how to do that. And so the action steps here will be to review the cheat sheets and the deal risk categories, to prioritize the asset classes, to get clear on what are the top 15 assets that you would like to invest in, and then ultimately to fill in your investment strategy sheet. So very clear, you've got your top 5 countries now, your top 5 currencies, and now you're choosing your top 15 assets that you want to focus on. What about partners? The power of partnership. Invest globally with confidence. And this will help investors be confident in their ability to choose the right partners. And we've got 3 white papers here. So if you're a beginner, we've got the 5 laws of building wealth through real estate.
Scott, we seem to have a bit of a frozen up. I don't know whether it's load shedding or whether it's local, whether there was a local breakdown. Scott, we're just going to see whether we can get Scott back on board. What I'm going to encourage you guys, if you've got any questions so far. Scott, are you back? Let's see. I think he's going to log in now shortly. We'll get Scott back on shortly. So just like to say to our guests, is there any questions? You got anything specific you want to fire away now, please do so. Just so that you know, if you got any questions related to the training that's going to happen, I highly recommend it. I mean, Scott has built up this knowledge over a number of years. And so, it's an opportunity, I think, to obviously help you on your journey. And also the book, which is a valuable resource, and really to be able to implement that kind of knowledge and information. So, okay, we're going to get Scott back online now shortly, and also stay connected. So this series, I think, is going to be a whole property series that we're going to be running over the next few weeks. Not only Scott, but we're going to wait till he comes on board, because there's a massive opportunity, and I encourage you all to hang around. This is also going to be on a recording. So we will supply with a recording, but I think there's going to be an opportunity for you to sign up. So the training, there is some good questions. Yes, the training live. There's a combination of live and there's a combination of virtual training. Some people are asking, I can't attend midday sessions. Are there other times? There are. Scott will explain that a little bit later. He will also talk about the amount of capital you have to be able to start investing if you are looking at these different asset classes. Does it include currencies like crypto? Yes, it does. And so I think, we will see, Scott sharing exactly how we can do that. Do you look at stock markets or only currencies? So yes, we look at right across the diversified sort of portfolio. And is the majority of the assets classes partners centered around just property, or the other alternative assets? There absolutely is other alternative assets. What will be the end result of me taking the going global package? Well, we're getting everybody to take action, and investment is really the action that you need to do. Because a lot of people spend a lot of time just sort of taking, and mulling over whether it's a good or bad thing. So essentially at the end of the day is to get you to invest. Do I need to be a technical expert to understand all the information? No, you don't. That's stuff that you can actually learn as you go along. So how does one go about the property tax implication? That is a big question. There are tax experts there that can help you. It varies from jurisdiction to jurisdiction, but the long and short of that is that there are tax experts that can essentially help you with that. Okay, I see some more questions there. Scott is coming back. We'll just hope that and it's not load shedding. Let me just put it very clear cut to you. It's definitely not load shedding. It's a local cutout over there. How long do you have access to products? Well, I think you get it for the duration for as long as you want. You can either do it in your own time, but I think to be able to finish the course quick and within a specific moment of time to be able to start investing. So we can run either at your own pace, or you can run at Scott's pace in terms of how you run that. And what about art as an investment to diversify? And these are some of the questions that we've had from some of our participants. Okay, so while we wait for Scott, I'm just going to give you, we have about 15 minutes left of the webinar. We hope that he is going to give his final wrap on that. If he doesn't, what we're going to do then is we're going to add this piece onto the video. We've got all your details. If you've registered for this event, we will send you all that information. In the interim, I just want to just let you know about our event next week, our masterclass for next week on the 7th, that's Wednesday, and it's only an hour. It's from 1 o'clock to 2, and it's 2 property authors, and it's a whole property author series. And that's going to be titled Unlocking Success, Key Lessons from 2 Property Entrepreneurs. One is Jaco Krobler, he's an investor and entrepreneur, and Grant Gavin, a leading real estate practitioner. And then there's a link below if you want to book. And then the week after, we've got Rail Levitt. A lot of people know he was South Africa's leading auctioneer for many years. And he also wrote a book about the whole rise, fall, and rise of a South African property auctioneer. He's going to be live. And that's going to be on Wednesday, the 14th of June, also from 12 o'clock. Scott, welcome back. I know we can't hear your sound there, Scott. We still got a bit of a sound issue. I've kind of given everybody sort of Q&As. The people are still on. There obviously are some people that have left. So I kind of have been keeping people just updated. And I know that you said you do have an offer for them. So pretty much Shane is sharing his screen. Scott, we just need to get your audio. I think we can hear you now. Are you there, Scott?
Yeah, you should have me. Sorry, guys. Welcome to Africa. I've got no idea what's going on. The power went off at 8 o'clock this morning. I still have power. You can see my. No, actually, let's leave the camera on. But anyway, I still have power. But for some reason, the Wi-Fi has gone off. So I don't know if the Vodacom router has gone down. Shane, we're going to have to rock and roll because we've lost a bit of time there. So all I'm going to say, if you bring up the 3 white papers again, can I just confirm you can hear me clearly?
Scott, yes, absolutely. I can hear you clearly.
Okay, excellent. Okay, so if we just go to those 3, just bring up all 3 white papers on the screen, I'd appreciate that, Shane. And all I was saying is that this is where to get the right information, so that you can go out and kind of get the right partners. So 80% of people that lose money, it's because they don't know what they're doing. If we go to the next screen, then it's all about, basically how to find the trusted partners. There's a way to do it around the world. That's a pretty standard way. And if you go to the next page, which is the action page, the action steps will be to read the white papers, to design your own due diligence, or as I learned from Dr. Hun Australia many years ago, you don't have to figure it all out yourself. You can literally copy ours that we've developed over the last 2 decades. The last thing that I think is relevant with regards to this whole thing is time. And it's all about portfolio construction, which is ultimately going to equal 85% of your returns. And we'll actually help people build a wealth plan. So rather than just walking aimlessly in the desert, you will actually need to have a plan. And the mission will be to help investors design their wealth plan. And so if you look at the next slide, it's all about the wealth plan. It's about creating a wealth plan certificate, which is a commitment for yourself. And this is your future self. Where do you want to be in 10 years? Yes, you want a globally diversified passive income. Well, how are you actually going to do it? So you get very clear on the why, the how, and the what. And for me, the action steps here are to understand the wealth plan, decide on your needs and your variables, and then ultimately to finalize your wealth plan in terms of that overall process. So I remind you all, we've got literally tomorrow a bonus session. If you can't make it live, it will be recorded. And then we start live next Tuesday with those 5 modules. And if you go to the next page, Shane, it's really important because people are going to get the 5 countries. I'm not interested in the theory. I'm interested in you walking away with an action plan on the top 5 countries to invest, the top 5 currencies, the top 15 assets, how to get the top partners, and how to walk away with your plan in terms of the overall process. If I look at the value, basically in the past, people would have literally paid $30 for the book. Then they would come on a buyer's trip that would cost them over $5,000 to fly to America, England, Australia. Plus they'd pay us $2,000 for the privilege. If you do a due diligence on a commercial building, it can cost anywhere up to $250,000. If you're part of our mastermind, it costs $5,000 a year. But if you take all of the value that we're chucking together here, and if you take everything that you're going to get, and literally it's a plethora of information, you're going to get over $6,000 worth of value. Now, I'll be honest with you, we could easily charge $6,000. And I told you already, 10 years ago, people were paying a lot more than that. People like Michael Honeysett and many others to come, to America, to England, to Australia to be able to invest. But we're not interested in charging that price. And the reason being is that we're passionate about helping everyone to invest. So we're not charging $6,000. The normal sort of price for this type of project or course would be about $997. We're not charging that either. When we go live, so once the course has actually been built, the price will be $497. And it's going to be an evergreen digital product that Neil and I will be using for a long time. It'll be $497. But I'm really excited that through our partnership with Neil, we're literally going to be launching it at $397 so that people can participate. Now, is $397 a lot of money? Yes. To some people, it's a lot of money. To some people, it's not. I can promise you, to me, $397 is not going to change my life one iota. But if I look at people like Michael 10 years ago who made a decision, it significantly changed their life in terms of the process. And so if you go to the next page, Shane, if you are interested, literally go to wealthgoingglobal.com/REI. They'll put it in the chat box for you. It's not for everybody. I understand that. Many of you will have reasons or even, and no disrespect, but excuses, and they say, oh, this and that and whatever. But, I always keep coming back to Michael Honeysett saying to me, Scott, I didn't even trust you. It sounded too good to be true. But I just knew I had to do something when it came to diversification. And I thought, well, I might as well go and do it with partners that are already doing it. And if you look at what his formula was, his secret formula, it was to get the right information and the right partners. And that's what we're offering you, if you come on this. I can't, from my perspective, when I do something, I'm 150%er. So I can guarantee you that we'll give you absolutely everything in terms of, getting to the next point. And Shane, if you can just go to the next slide, basically. And then finally, the last couple of slides, and then Neil, I'll hand over to you and I doing a Q&A, is that most people learn, in different ways. So if they just read the book, they're going to get sort of 10%. If they listen to what we said today, 20%. If they listen and see, 30%. But ultimately, if you actually do, you're going to get higher than 90%. Okay. And that's why I'm not interested in giving you the theory. I'm interested in you walking away with an action plan in terms of you doing. So just to remind you some of the action bonuses, because Neil asked us to always add value. So one is we've got literally a session tomorrow, which I don't normally share, but it's the power of clarity. It's literally the secret formula on how to unlock yourself and make sure you get the results over the next 10 years. Then every week, starting next Thursday, we'll have a live Q&A. So you'll learn the theory on the Tuesday, and you'll have the ability to ask anything you want on the Thursday. So you can watch the recording 6 months from now, but you won't have the ability to interact. This is a unique opportunity to get the information that you want. There'll be a community group, so it's not just me. You can learn from others in terms of the overall process. And maybe if we've got time just now, Shane can share with you how it all works within the system. You'll get access to the Wealth Hackers, which is a whole plethora of information. That's worth $197 on its own that you'll get for free. You'll get the book being updated. So I'm going to be doing cheat sheets on the updates of the book. You'll get the deal risk categories and the asset terminology. You'll also get all our calculators. So I've actually never shared these before, but these are all our calculators, which you'll get access to in terms of the process. And then one thing that I find really interesting is that when I help people invest, I've got a bunch of investors helping at the moment in Phoenix in an awesome commercial deal. And they speak a different language over there. So we're going to make an entirely different course called the Dummy's Handbook to Cracking the Investor Code. And it's explaining the whole investor language. But for now, we're going to chuck this in for free for everyone that joins with regards to it. And if you're interested, just literally go to wealthgoingglobal.com/REI. I know that, there's a limited time for people to be able to participate. And also this particular price we've given as a unique opportunity to Neil and his community. So there's not a lot of spots available. So if you're interested, I would advise you to copy Michael and to take action. You'll get access to a bonus session at the end as well, where I'm going to bring it all together and I'm going to show you how you can use what you've learned and with where technology is going over the next 10 years so that it can help you with regards to smart investing. And finally, I think, Neil, I will finish off by saying that hopefully today, if nothing else, we've shared with people the formula, how to build globally diversified income, passive income. Ultimately, that's what equals freedom. And, it's diversifying across countries, currencies, assets, partners, and time. And hopefully, Shane, if you go to the next slide, for me, it's the course that we built is showing people how to do that. Now, they can do it on their own, or we can walk a journey together and sort of hold their hand and get very clear on, if you go to the next slide, it's really, really important that people get clear on what are the top 5 countries they want to invest in. What are the top 5 currencies? What are the top 15 asset classes? How do you find the right partners? How do you build a plan over the next 10 years? And finally, how do you bring it all together with regards to technology? And so, Neil, I think that's probably everything from my side. Shane, what I'd recommend is you jump to the final slide. We'll skip the rest of the slides so that Neil and I can interact, just with a call to action and everything that's included so that people can actually, see everything.
Okay, great, Scott. Thanks very much. I think that was great insight. And
I'm sorry. I'm sorry for the delay, dude. I tried everything. I've got batteries here. I'm backed up, but there's only so much we can do when the whole country goes. Well, my whole town goes down.
I know. Look, but that's the whole thing. In South Africa, we know how to make a plan when something goes wrong. At least we can pick it up. And
I do have power, just for the record. But no, there's no fiber coming into the house.
No, absolutely. Yeah. So Scott, I think maybe there are questions. I mean, there was a question about what's going to be the end result of me taking the whole wealth going global package.
In simple terms, Neil, you walk away with a plan. So, most people have the theory, but you're actually going to walk away with an action plan. You're going to know what are your top 5 countries you want to invest in, what are your top 5 currencies, what are your top 15 assets, how do you choose the right partners, and you're going to have a wealth plan that ultimately you'll know where you are, where you want to get to. So you'll be very clear on why you're doing it, how you're going to do it, and what you have to do. And for me, the simplicity is in the clarity, because once you've got the clarity, then you'll get the results.
Okay, so from Rosa, what is the minimum amount you need to do these investments when you've got your plan?
So it's interesting, whether you use a platform like Wealth Migrate, there are other platforms out there. Literally, you can get started from $10. So one of the things I've learned, Neil, is that, people saying they don't have the money, it was probably a valid excuse 10 years ago because you had to fly overseas and you needed probably $100,000 plus to be able to get started. Nowadays, with technology, you can get started with $10. And therefore, I don't believe there's any excuse for anyone when it comes to capital with not getting started. And there's nothing more powerful than learning while doing.
Excellent. And is there a payment plan on the 397?
Yeah, if you go to that link, thewealthgoingglobal.com/REI, there are some payment plan options. Again, our philosophy here is to try and, give people accessibility. People do say to us, well, if you want everyone to have access to it, why don't you make it free? It's quite simple, actually. When people pay, they pay attention. And we want to work with committed people that want to get a result over the next 6 weeks.
Okay, you mentioned the sessions, or most of them are live, but if some people are working in the day, you can't attend a midday session. Are there other times that people can attend?
Yeah, so I saw a question actually come through from Bucks. So Bucks is in Dubai, and he asked the question about that. And he said, look, I can't come during the day because I've got a day job. And what I said to him was, everything will be recorded. You'll get full access to the university and to the library. And if there's time just now, Shane can take you through that. But the bottom line is, by committing to come on a journey for 6 weeks, you're going to get the result after 6 weeks. I myself have done so many courses online that I only partially get through and I never finish. The difference with a beginning and an end date and an accountability partner is that you're going to get results. So whether you want to watch it live or whether you want to watch the recording in the evening, I would highly recommend that you come on the journey with the rest of us. There's over 50 of us already doing it, and we're going to hold each other to account to get the result.
Excellent. And currencies, does it include crypto as well?
It does. So James Painter covers all the major currencies, but he also looks at Bitcoin, Ether, etc. So it does give people perspective on their forecasts as well.
Do you look at stock market, only at currencies?
So he actually covers stock markets, commodities, currencies. So it's a very, very, I find it a very beneficial tool to be able to do some forecasting and scenario planning with.
Yeah, good. And is the majority of the asset classes, partners, and the countries you're centering on for diversification around property, or are there other alternative asset investment opportunities?
Well, look, Neil, I mean, to be fair, you and me are both passionate about property. I know that. And, you know, so we will definitely be looking extensively at residential and commercial property, and specifically at the different asset classes within those assets. So whether it's industrial, retail, co-living, London residential, medical, you know, just as a couple of examples, office. But also we'll be looking at other alternative assets. So structured notes, private equity, gold and silver, just to give a couple of examples. So it's the top 15 assets. Diversification is the key thing. You don't want to be exposed in any one sector too much.
Okay, great. Scott, I think that's the wrap. I think maybe just the final call to action. Where do people go to sign up? Is it the wealthgoingglobal.com/REI? Is that where the link is?
100%, Neil. So we've done a special offer specifically for you and your community. So if they go to wealthgoingglobal.com/REI, then they will actually get the price at a discounted rate. It's actually going up by more than $100 in the next couple of days when we go live. Plus, we've also chucked in a bunch of extra bonuses and fast action bonuses for your community. So it's important, go to wealthgoingglobal.com/REI, and literally, you know, for those people that want to take action. And I do joke with people, Neil, you know, why do we incentivize people to take action? It's because over the last 2 decades, I've watched that people like Michael Honeysett that make a decision and take action are the ones that get the results. So we're incentivizing action takers. Like, we want to work with people that want to take action because we want to help them get results. And so that's why we're doing it. I joke with people, but it's literally using what, you know, most people aren't action takers, but for those of us that are, I know you are, Neil, I know I'm one, which is why you and I have sort of created the careers that we have in our life, and neither of us have been scared to invest in ourselves and our personal development. We have literally created this offer with the fast action bonuses, etc., to try and give people, you know, it's easy to say I want to build a globally diversified passive income, but if you want to build a tall building, you have to have a solid foundation. And the purpose of Wealth Going Global is a solid foundation, and specifically for your community. And that's why they must use the /REI. We've added in a whole bunch of bonuses so that they've got a very solid foundation upon which to build a tall building.
Awesome. Scott, thank you very much for your valuable contribution today. To everybody else there, I encourage you, please, to act. And if you're not going to sign up for this course, then at least, you know, follow Scott, stay connected, follow REI, come to our events. As I mentioned, we've got events every single week, but implement the advice that is given over there. I think, you know, otherwise it's just, you know, you're just a spectator at the end of the day. But I'd seriously advise, sign up for the course. That's the first prize, and it'll help you on your journey. And, you know, Scott's also written that book, you know, explore, buy the books. It's a valuable resource. You know, implement his advice. You know, I think that's important. I mean, he shares some golden nuggets here today that, you know, and that just doesn't come from something that has come overnight. It's come over for a number of years and working with a lot of experts. And Scott, I think you really showed us how today in terms of, you know, how we can do that. So thanks very much. I really appreciate that.
No, Neil, look, you know this, dude, and you and I have both done it. I know I haven't had the privilege of meeting Robert Kiyosaki, but you've also met with him. So you're a couple of steps ahead of me in terms of some of the people you've met. But I think one of the things that you and I both try and do is put ourselves in the room where we're the dumbest, poorest person, because then we can only kind of go to the next level. And, you know, it's something that I'm entirely, truly grateful for, that not only do I get to learn from those type of people, but I also get to share and give feedback. And as an example, you know, Shane's put up here our resources. So you can literally go to resources REI, and all the links that we shared today, you can literally go and get access to them. Because one of the things, Neil, that I want your group to walk away with, I want them to remember 2 things. The first one is that by turning up to an REI masterclass, you're walking away with value. So whether you do anything or not, you're walking away with value today, because you've learned some very valuable lessons from 10 of the wealthiest people in the world that you can decide to copy or not, but that's your choice. And we've also given you the sources of where to get the right information. So for me, you've got the value, hopefully, if nothing else. But the second thing that I want to, endear upon you, as your thing to walk away with, is that just getting the knowledge versus doing something about it is going to be the difference between where you want to be in 10 years and where you are right now. And that's the difference. You get to decide. Do you want to create the life you want for your future self, or do you want to kind of stay where you're at? And, again, I specifically started by showing you pictures of Neil and I 10, 11 years ago. We were saying the same thing 10 or 11 years ago. And look at the profound impact it's had in some people's lives, but they were the ones that took action. It's not Neil and I being clever. We're showing you how to do it, but you still have to do it for yourself.
Absolutely. As you said, as I mentioned, right at the start, either you invest 20 years ago, and that's the first option. The second option is you invest or climb in today and make a plan today. Otherwise, it's going to be too late. Scott, once again, thank you very much. It's been an awesome masterclass. And to register, there it is. Go to wealthgoingglobal.com/resources REI.
Just go to the Neil. Just go to the other slide, Shane, with the slide if they're wanting to join the course. Yeah, that one there. Because that's the resources. But this is actually if they want to join us.
/REI, wealthgoingglobal.com/REI. Guys, Scott, we'll be working together going forward, and it's really awesome having you again. And we will chat, but I hope you all take advantage of this going forward. Thank you all for joining us and being very patient, and for being part of this webinar. We look forward to seeing you also in future sessions as well. Until then, stay safe, successful investing, and may your real estate ventures all be prosperous and fulfilling. And it could even be more fulfilling if you sign up for Scott's event over there today. So thank you very much. And until next Wednesday at 12 o'clock to 1 o'clock, it's Scott Picken, and it's Neil Peterson of Real Estate Investor signing out. Goodbye, everyone.
Thanks, everyone.